Hello everyone, this is Gaurav from Kuvera, and today I have Pratik Oswal from Motilal Oswal. He heads passives for Motilal Oswal. Pratik, welcome. How have you been doing?
Thank you, Gaurav. Thank you for having me, and I'm excited for our conversation today.
Great. So today we are going to talk about factor investing, right? So let's start with a very simple question. Tell us about factor investing and how did it originate, and where are we in factor investing in India?
Right. Factor investing is been around for many decades in the US, and we're seeing that it's slowly sort of coming to India as well. What exactly is factor investing? It's basically investing in strategies. So for example, a lot of fund managers in India have certain philosophies that they adhere to when they're looking at picking stocks. Some might be a value investor, some might be a growth investor, some might be like a momentum investor. So the idea is that about factor investing is that normally when you look at passives, you're looking at strategies that follow an index, like a Nifty or a Sensex. But today you can also follow passive strategies which are low cost, that follow a certain strategy, like a low volatility or a momentum or a value. So a lot of investors who are looking to bet on a particular strategy can do that via factor funds. The reason why they're very popular is because normally what happens is a lot of these strategies, at least in certain periods, tend to actually outperform the indexes. So what a lot of investors do with factor funds is that they have the opportunity to outperform the benchmark while keeping costs low, which I think is some of the sort of positives of using factor funds in your portfolio.
For an investor who's out there, right, probably doesn't know a lot of these words.
Yes.
Value, growth, momentum, low vol. They're not the most intuitive, right?
Yeah.
I mean, in the fund management space, I understand everyone gets them. How do they evaluate a factor strategy or a factor fund? What are, say, 2 or 3 things that they should look at to at least get some sense on, is this factor fund right for them?
Yes. Yeah. So a factor is actually a technical word for a rules-based fund.
Right.
So a lot of these factor funds are essentially rules-based fund, and they have a certain criteria of what stocks and how they select stocks. For example, you have the 4 most popular factors in the world. I mean, there are multiple factors, but the 4 most popular ones are momentum, low volatility, value, and quality. What does that mean? If you're buying into a factor which is, say, value, then you're essentially buying a fund that only buys value stocks. And how do you define value? It's price to earnings, price to book. So basically, if an investor wants to only sort of buy a basket of value securities, then they can do it through a factor fund. If an investor wants to buy a fund which is extremely low volatility in nature, for example, they want to hold stocks that are very low volatile, very sort of low volatile. They tend to do well in sort of bear markets, especially like what we have right now. That is a good strategy for them to go for, because what we've seen is that they tend to be a lot more steady as funds as your regular passive funds. So the idea behind factor investing is investors who believe in a certain philosophy can actually invest in those funds depending on what strategy they choose. What's also important for factor funds is that there's this sort of a misconception that factor funds give you alpha. That all factor funds are much better than, say, a Nifty 50 or a Nifty 500 just because they are strategy based. This is actually not true. So what the true is that you have to be able to buy and hold on to them for a very long time. There will be times, just like any other actively managed fund, that they will underperform the index. It's very important that as investors, you should not have unusual expectations of these funds being able to outperform at all points in time. There are times when they'll underperform, there are times they'll outperform. But what we've seen over the last 10 to 15 years time is that they have actually outperformed the index, considerably by 3 to 4%.
So to paraphrase, factor funds are active funds, except that the active part is rule-based and not driven by a fund manager, right? So you create a rule, and that rule could be around, like you said, valuation.
Exactly.
It could be about low volatility. So what kind of investor should think about factor funds?
Yeah, so I think an investor who wants to bet on a certain strategy, who's looking to sort of maybe look at enhancing their returns, while obviously taking a lot more risk. So essentially, a lot of factor funds tend to be a lot more risky than your plain vanilla index funds. So I think investors who are slightly more aggressive, who are looking to sort of make more money, and who understand these factor funds, are are sort of the right type of investors to go about. So
So this leads to the other question is, how does someone then learn about factor funds? Because it
Yeah.
almost seems like if you don't understand what a factor fund is, you should not invest in it. Which by the way is a very good investing philosophy in general. If you don't understand it, don't invest in it. But then how does one learn more about different factors and what they mean and how they are calculated?
yeah, honestly, I also agree with that philosophy completely. I think factor funds are funds which ideally investors should not really look at returns purely, because as I said, I think there might be times that a factor funds will underperform. So as a strategy, obviously it's important for an investor to do their research before buying these funds. Also, there are a lot of these funds, there are 4 or 5 different options. So which one do you buy is really depending on your understanding of that factor. So I do agree. I think the idea here is, if an investor is looking to go out there and buy factor funds, it's important that they understand what these rules are and how the stock picking happens. For example, for a Nifty 200 Momentum 30 Index, which is today the most popular factor. Obviously, one big reason to why it's popular is because momentum has seen that over the long term, has worked well in terms of high returns. But again, I think there might be times where it does badly as well. So I think for an investor to buy that fund, it's important that an investor understand how the stock selection happens. So you are looking at, say, taking the top 200 Nifty 200, which is the top 200 stocks in India, and selecting the 30 stocks which have the highest momentum, or that have appreciated the most in the last, say, 1 to 2 years time. And that's how you understand how the factor sort of works. So I think it's important for an investor to do a little bit of research on their own to understand these factors, or seek education before going out and buying them.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.